Good morning, all of my AIM followers. This is Jeff Weber with the latest on our series of Zoom webinars explaining the fine points of AIM. Today, I'm going to talk about my and Brett's investing newsletter that I've been publishing for about 32 years. I'm going to explain to you the best way to use that, and that is going to be for people who currently subscribe to my newsletter and people I hope in the future would like to subscribe to my newsletter. Remember, I always offer my newsletter for free to any of my AIM clients. So with no further ado, I'm going to start explaining the best way you can use my newsletter. You're getting an advance peek at the September 25 newsletter. I finished it up a little early, so I would be able to give you the latest information. It's gone through many different formats since I started it roughly in 1993, and this is the current format I use, which I think is a very good format, and I will explain it to you. We always highlight at the beginning specials that are significant, and you can see the first red one says 3 or 4 leaps and the ETF are up. Stock portfolio was slightly down. In a lot of instances, it's good that the stocks portfolio is down because I don't have anybody exclusively doing stocks right now, but I have a lot of people doing leaps and the newest addition to the AIM family, leveraged ETFs, which I will talk about when we get to them later in the newsletter. Like you see there, it's the 32nd year. I'm proudest of the Dow Jones Industrial Average stocks, as I call them, those boring stocks. Look how they've done 32 years later. I think that qualifies as the ultimate back testing for AIM investing, that with stocks, they've grown from 15,000 to over 309,000. And there's, even though they were down 15% this month, they're still up 1,603% over 32 years later. And I hadn't even used the dividends in about the first dozen years I was doing it, from about 93 to 2005. And then I felt it's important to tell my readers why I do this stuff. I want to help my family have a great future, just like I know you want to help your family have a great future. So these are the people who mean the most to me in life. And so I like to emphasize to the world that I have a reason and I have a family that I love and I want to keep doing it. And I felt it was important to tell you that I also use AIM. That's why I write the newsletter written for the investor, written by the investor who cares about the investor. I care deeply about each and every one of my people that I'm helping in any way possible, either through reading my book, my newsletter, or being one of my clients. I thought it was important to let you know that I'm the real thing, so I scattered a few compliments I've received in my life, and I'm very grateful for them. And I love helping people, even if they, and my goal is always to train you to do AIM by yourself so that you won't need me forever, because I won't be around forever. Next page. I feel it's important to know a little bit about the history of investing, because you really need to know how the stock market works and why AIM is the perfect way to make high profits based on what the stock market does. And this is, I love stories like this. If you're old like me, you probably remember Abby Hoffman and Jerry Rubin, and they used to love to pull capitalistic pranks on the people. And I'm sure this was a great illustration that one of the reasons AIM works so well is that many in the stock market are very greedy. And I found it amazing that people who were, trade millions of dollars would drop everything and dig on the floor to get $1 and $5 bills. So true capitalism is very basic. Scroll down a little. I try and give you a different AIM tip of the month every week. And with the help of one of my investors, I found a new way to improve profits in a market where it's going up and down in a short period of time. I had come up with a method called lean AIM, which was merely buy an option. Say you can only afford one contract on Tesla. I had a guy buy one contract on Tesla for 5,000, and doing lean AIM, all we did was to immediately set up a limit sell for 25% higher, which was $6,500, and wait for that sell to happen. And that sell happened a month later. Well, I combined the lean AIM method with regular AIM, and I'll scroll down to the advanced micro devices. This is my good friend Chris, and I'm going to show you exactly how this worked really efficiently. You see, if you look on August 6th, the second row, you see he made a buy of 4 contracts at $35.
Hey, Joe, can you see my cursor here?
Yeah, I see your cursor. Yeah,
Okay,
four
right.
contracts. And if you scroll across to market order buy sell, which got hacked a little by you see he paid $14,000. Okay, now go down a couple rows and you see in the remarks column, you see the word hybrid. And you see how Advanced Micro had a good period of time a day later. Notice how he bought them on August 6th and he's selling them on August 7th, and they have gone from $35 to $44.29. So what we did was we decided to do a hybrid. What does that mean? That means instead of doing what regular AIM told us to do, we decided to just sell the 4 that he bought a day earlier for $35 and book about a $9.29 profit. So long story short, you see he bought them for $14,000. A day later, he sold them for $17,716. So that is and then when you do that, what we decided to do, we go back to we pretend that the buy and sell of the 4 never happened. So we go back and use the original portfolio control amount of 74,608, and that becomes our new target. And literally we're pretending we just bought them for the very first time. So you see, and I highlighted it with the thing, all profits are good. Quickie profits are even better because now you've increased your cash total. You see how we went back from 56,000 to 70,000. I'm sorry, whatever. So you made a 1-day profit of 3,716. And you see, again, I give you a good explanation on that. And again, if anybody's reading my newsletter and has a question about anything they read in it, just give me a call. My number's always in the issue. I gave one more example on SPY. The same gentleman had that. And you see right there, I'm always trying to reach out to you, and you're welcome to call me 7 days a week if it ain't too late at night. Okay. Again, we did a hybrid. You see on this one, it took a little longer, 5 days, 6 days. You see, I just highlighted the part of the spreadsheet where we had the hybrid. So you see, he bought them at 20, he bought originally 9 at 24.40. Well, 6 days later on August 7th, it went from 24.40 to $30.18. That's what leaps do. So we decided to sell the 9. I don't know why doesn't show the money there, but probably my mistake. But you sold them for a very nice little profit. And again, you went back to 32, and you notice how you dropped the portfolio control from 118,756 to 107,000, which was the original one before you bought the 9. So that's an error on my part. Sorry about that. Okay, scroll down again. I think I got an explanation. Oh, and here's an important, I try and give you important tips that affect things, because the stock market is always changing. So right now, I'm telling people, I don't want you to buy 2027 leaps anymore. I want you to wait until the 2028 leaps come out in middle of September of 2025, which is about 3 weeks from now. So what I'm suggesting, instead of buying the leaps, is to buy the leveraged ETFs. Why? Because the leveraged ETFs never expire. Think of them as like a stock. And I thank my investor, Sean, who was the one who told me about leveraged ETFs, and I checked them out, and they're perfect. Most of them are put out by a company called Diversification, and when you get my leaps list, and I'll explain that a little while later, you will see I update the leveraged ETFs every month at the beginning of every month. And I show you the current price of the ETF and the 52-week high and low, because again, AIM likes you to buy leaps and ETFs when they're at or near their 52-week low. So right now, I started that service. You see, I explained that, so I won't go into the details because you'll get a copy of this and you can read it for yourself. But I started this about 4 months ago. Here is what the weekly list that I send out every Saturday or Friday, if I can get it done. Because the biggest question I always get asked is, well, Jeff, I'm ready to buy a new something for AIM. What do you suggest I buy? And it just took me too much time to try and look up for a bunch of different people, what was good right then and there. So I put my thinking cap on and figured out a great way to answer that question of what is the next good thing to buy, by deciding I would make a weekly list that was absolutely current. So when I do this LEAPS list and ETF list that you see here, and the ETFs are highlighted in green and the LEAPS are in white. So I list what I consider all the essential information you need to decide if that's a good one for you. Of course, we always start with the name of the stock or ETF. We start with the symbol because that is always the way to look it up. And then I give you the exact strike price I like, and I show you the open interest. That means the number of contracts that are owned. I favor contracts that are over 1,000 in ownership. Then I show you the stock closing price. Then I show you the 52-week low. And then I show you the 52-week high. So here's why I like the Apple one, because the Apple one was a $201 closing price, but its 1 year high was 260. But what's more important than the stock price is the actual LEAP price that we're looking at. So why would I like this LEAP, the 200? Well, I like the high ownership, the 8,656. It closed at 34.53 on this one. Its 52-week low was 20.47, and its high is 84.07. A little hard to read with my eyesight. So you can see it's the year high on Apple is more than double what the low price is. I guarantee you, if it goes anywhere near its previous high for the year, you'll make a lot of money. And if that isn't good enough, if you go down 2 more rows, you see I have the Apple leveraged ETF. Notice how the symbol is slightly different. The stock symbol is AAPL, but the ETF symbol is AAPU. Now, since it's just like a stock and not like a LEAP, I can put NA in the strike price and ownership because there are no LEAPs on this, but on any of the ETFs that we want to buy. We're buying them. And another important factor to realize is you never pay a commission on an ETF. So your trading is entirely free. And I'll give you an example of why that's important. Look at the Tesla one a little further down, and you see that you see the ETF closing price on that, which is current. That's the one, literally, that's the price it closed at yesterday, $12.36. Another advantage of using the ETFs, if you look at a price of Tesla stock, it's about $330. So the ETFs are much cheaper and give you much more leverage. So you could buy 1,000 shares of the ETF on Tesla for $1,238. And I use a little different AIM method. I'll just give you a quick example of what it is, and then you can call me. Again, write my number down. It's 210-478-0655 if you have any questions that you'd like to talk to me personally about. So one more second, just go back to Tesla. And here's something to realize on these. I didn't even tell you the best part. Besides saving money on commissions, because you don't pay any, many of these have high dividends. For example, the Apple ETF AAPU is currently paying a yield of 25.323% annually. Microsoft is paying Well, Brazil fund is here, 4.11%. Six of the, like I said, the Microsoft's paying about 4%. They pay quarterly dividends to you. And again, if you're doing this in a Roth IRA, you're escaping both taxes and commissions totally on these investments. So that makes them an even better buy.
Yeah.
Okay, so let's proceed
Hey,
on.
Jeff. Yeah, let me just also mention, repeat, when people get this weekly list through your subscription, every month they get the complete list of all the
Right,
leaps
yeah,
ETFs you
that's what I was
follow.
going to do.
Yeah. But you
When you
classify
subscribe
those.
to my Leaps list, you get both the master list that I send out once a month at the beginning of the month and the weekly list that I send out weekly. Both are going to be totally current. So
But
what I
the
do in the master list is I have a complete list of about 200 leaps and 25, 30 ETFs. And what I do on those is I just rank the stocks from cheapest to highest, because everybody has a different amount of money they can afford to invest. So once I type in all the information showing the closing price, the 52-week high and low on the stocks, and the dividend yields on the ones that have both the stocks and the ETFs, maybe you'll see that later. I don't know if we have an example of that, but
well, I think the point though is what I like, you've done the work to classify them with color codes. So for
yes,
instance,
they're
if you
color
want to,
coded. All the yellow ones in the master list are currently under $25 a share for the stock. And normally you get a leverage of at least 4 to 1 between the price of the stock and the price of the option. So if the stock is $20, many times the option is only charging $5 to buy it. So
and you've also color coded every ETF that pays dividends. If you just want to look at those and earn more money that way, they're easy
yes,
to
yes.
find in the
So
list. So, yeah.
yeah, so I make it as easy as possible for you to find just the type of investment you want, and it's current, so you don't have to think you're getting old information. This is an important tip that I always use, since we're using limit orders, buy and sell limit orders for our stocks, uh, our leaps, and our ETFs. They can expire at some point. So use the longest date in the future you can. And I always remind you, when you have a buy or sell, to cancel the one that didn't happen. So for example, if you have a sell on one of your ETFs, you're going to want to cancel the old buy information, because every time you have a buy or sell with AIM, the next buy and sell both change. And what you'll find to help you with the limit orders, most stockbrokers will send you an alert if you have a buy or sell. All brokers have a 24-hour, 7-day-a-week helpline. So if you're not receiving alerts on your buys and sells, call them and find out how to do it. Okay, scroll down. I'm proud of this. Brett helped me greatly on this. We have put together a 9-hour course on AIM investing that tells you everything about AIM investing, and it's in 20 different video modules, downloadable files. It's easy to learn, and I'll be happy to answer any questions you have from this. This is the best way to learn AIM quickly and completely. I lowered the price from $900 to $495 I'm sorry, $9.95 to $4.95 to help you. So you'll save $500 forever. And of course, it comes with a complete money back guarantee if you don't feel it's the right course for you. So that, again, you can look at some free modules and see if it's right for you. Again, so there's zero risk. I'm not, I didn't, I'm, you know, I'm trying to make up for all the people out there who want to scam people in the world of investing, because it's very sad. And they all seem to be very successful with scamming, and can steal billions of dollars. I came up with my AIM investing course years ago, over 30 years ago, really. And I designed it to help people of all income ranges. So I can help you if you have $100 or if you have $10 million. I can help you. I've got something for you. And you'll see that later on when we get to the model portfolios. So if you have any questions about my course, I'd be glad to answer it. I'm proudest of this guy, Mark Donahue. I helped him make $1,250,000 in 2020. He started with 550,000. He happened to catch probably the last great bull market year we had. And AIM, a lot of you who are doing AIM right now haven't truly seen the benefit of AIM because we haven't had a roaring bull market. Mark got to see a roaring bull market, and in 1 year, he was up 211%, or his 550,000 grew to 1,750,000. He was able to take 200,000 of that and have himself a custom built home in Mexico. And I was so happy for him that he got to live life his way. I had another guy who strictly invested in Microsoft and Apple, and he, in 8 years, made an $800,000 profit, starting with about $100,000. And he quit AIM investing for the best reason in the world. He paid that 800,000 in profits he made to have a custom built home for his disabled parents. So I felt really, really good about that. Next, scroll down. Okay. Here's the book that Brett helped me make a real improvement on. I think this is the best book we've ever written. It's a great short way to invest. I can even tell you the link from memory. It's https://AIM4MM in caps. That will take you to Amazon, and they're listing the book now for like a 25% discount. So if you ever wanted to get and it's not a long read, and I used as an example Amazon. So it looks like it's for wealthier investors. And I did target it for wealthier investors, but it's also gives you AIM for smaller investors too. And I think it's very well written, and you will immediately see how it's a scientific, not emotional way to invest that can make you a ton of money. Okay, scroll down. Here's another book I wrote, a smaller version called Here Are the Customer's Yachts, which was written specifically for the smaller investor who needed leaps and one who liked conservative investments. This one is based on the Dogs of the Dow strategy, which was made famous by a website, and it picks the 10 Dow Jones stocks that pay the highest dividends, and they average around 3 or 4%. AIM will work very well with stocks that pay a high dividend, as well as leveraged ETFs that pay a high dividend. So if that sounds interesting to you, I would urge you to get my Here Are the Customers' Yachts book. And again, you see the link highlighted below. We use bit.ly for it to shorten it so it's not too hard to type. And you click on that, it'll again take you to the site to buy my book. And that one's even cheaper than my Aim for Millions book. So I hope you consider buying them. And again, you can make a lot of money on a stock that has a good dividend. I have one of my investors who is using it with Altria that pays about a 7% dividend, and he's averaging over 20,000 a year in dividends. I thought it was important to get you educated on other option strategies. And, you might get ideas you can use with AIM. So in every monthly newsletter, I pick a book I like and write and get a book review from Amazon and suggest that you order that book. So all of these books are available on Amazon. And I again, your choice. I try and pick lower price books, and I try and explain why I like the book. Another way I like to get you more experience out there is every month I look for a good Twitter site that will help you. I try and again concentrate on options. I give you the link for the option and check them out. If you're looking for more information, you get it. Okay. And again, you have to put in legalese and everything to protect yourself and other people. And now I like to highlight new videos I put on. They're on YouTube. You can go to my website, jjjinvesting.com, look for videos at the top. I think it's in one of the drop-down menus. And then it'll take you to Yahoo, or you can watch it right on my website. And you get another 15 or 20 minutes of me talking about a subject. So I have a pretty good, I think this is a very good video about what are the best investments for AIM investing. And it's only almost 14 minutes, so it won't take too much of your time. Again, read it with a pencil and paper in front of you, and then you can jot down any questions you have. And again, call me, I'll be glad to answer it. I used to publish a list of stocks and leaps every month that I liked, but I did away with that when I came up with my leaps list, the master list, and the weekly list, because I couldn't guarantee the ones I put in the newsletter were current. I knew they were still, I use prices within a month or so, but I'd much rather give you prices that are completely current. I send the information to you over a weekend, so you have a chance on Saturday and Sunday to look at my list, my master list once a month, and my weekly list 4 or 5 times a month. Pick one that you might want to add to your portfolio, and then you can buy it Monday morning, and the price should still be current. And again, if you're buying one of mine from the weekly or monthly list, and you have a question about it Monday morning when you're thinking of buying it, give me a call. I'll be up. Again, you get subscribed to my leaps list for $95 a month, and you can cancel anytime. when I did one of my prior webinars, a very nice gentleman named Ed Masnio, a 33-year veteran of option trading, and he learned about my book, Aim for Millions. He liked it so much that he called me up and said I should form a Facebook group on AIM investors. And I told him I was just too busy with everything I was doing. So Ed graciously volunteered to host the meeting. And Brett is also an administrator with that group. And we have about 170 people in that group who are, learning about AIM and curious about AIM and whatever. He's a great guy. I appreciate all you do for us, Ed. And again, I'd like to urge you to find his group on Facebook. You see the link for it right above. So I try and put links in for everything in my newsletter. So if you're interested in the group, you can go right there and join it. As you can see, most of these links don't roll off the tip of your tongue. They're long and complicated. Okay, next slide on down. Now we come to the first of my model portfolios. Because most people, when they see a new way of investing, they want to know, does it work? And I would not have presented anything to you that I didn't know worked. And you see how these are 10 single stock leveraged ETFs. All of them have a dividend over 3% at the time. So you can see Tesla. I didn't post the dividends here. I won't waste your time reading them, but you can see some do pay it and some don't. But now I would never suggest, unless you really liked it, a portfolio of 10 only ETFs, though I can't see any reason not to recommend it. This has only started in May. So May, June, July, and August. Think of it that way. In 4 months, these 2 times leveraged stocks, basically, is what they are. The gains of the stock are doubled. You can see they're up 35% in 4 months. That's pretty amazing. Plus, I do AIM a special way with the ETFs. 1 second, reality is taking over. I have to let the dog in.
Okay, Brett here jumping in while Jeff is taking care of the dog. Can we take care of a question from Denny?
Yeah, sure.
All right, he asks, if you were going to do AIM with leveraged ETFs, will the leaped course help with that?
Yes, they will, Denny, because you got to view AIM comprehensively. AIM will make you large profits, but do you want to give them to the government, for example? And I have an extensive section in the course where I tell you about how to use a Roth, or if you have your own private business, how you can save a lot of money on taxes and put into your retirement and save paying short-term capital gain profits on your profits. And also, I have some other great information in there. I have a lot. I offer a free book in the course that shows you about 50 quick ways to increase your profits on AIM. So I have a lot of information in there about AIM that I don't have available in my books.
Yeah, and also let me add, Jeff, for his benefit, no matter what investment vehicle you're using with AIM, you still have to know how to do the calculations, how to calculate the buy and sell, and how to update your spreadsheet with each trade. And so that's what the course walks you through step by step with examples, and you actually see Jeff doing the calculations several times with several examples. So, right, Jeff?
Yeah, that's true because it's very important to get all the calculations correct.
Yep.
And I show you again, I show you some of the tips, and it's just basic arithmetic. But again, if you add instead of subtract or multiply instead of divide, you're going to cause yourself a problem. So if you're not signing up to be an AIM client, I would advise you strongly to buy the course so you learn the fine details of how to do all of the various rows and columns on the spreadsheet. Now, I'm proudest of this one in a way. You see, this was the original portfolio I ever did back in 1993, which is what, 32 years ago, about when I started the newsletter. Because what did I do? I said, I have to prove to myself that AIM works with real world stocks, because leaps and leverage ETFs didn't exist back in 1993, if you remember. In fact, back then, stocks were listed in fractions and not decimals. So I picked 10 of the most conservative Dow Jones type stocks to work with and see if they would work, with AIM. And I think you can see 32 years later, the 15,000 you started with, because I started every one of these 10 with $1,500, 750 in cash, 750 in stock. And this is how they've done in 32 years. And I didn't even correctly include all the dividends for about the first dozen years. So you're going to have up and down months, but the secret to remember in investing is if you look long term at the stock market, it has always gone up. I had a slide I saw on, I think, X at one point, and somebody looked at the last 25 years of the stock market, and 20 of the 25 of those years were profitable. So AIM is perfect for the way the stock market works in the real world, because you're buying when the prices of the stock, ETF, or leaps are low, and you're selling when they're high. Okay, so you can see I show you the monthly total and the overall total, and all the overall totals are way up. Okay, next one. I'm proudest of this one. In the money merely means the price of the leap is lower than the price of the stock. So most of these names will hit you as obvious as household names, but look at the amazing results, especially look at Apple. If you had, and these are all compounded, which means any profits I made in the prior 19 years were reinvested when AIM said to buy more. Look at it, that's up 40,788%. Wouldn't you like to say in 18 years you made a 407 bagger? That means the price has gone up 407 times the starting price. And so that's what I tell people. I said, if you do AIM consistently for about 15 years, you'll be able to retire from the day job and do what you want in life at a much younger age. Why do you want to wait till 70 or 75 to retire if you can retire at 40 or 45? So what I try and show you, and I kept American Airlines in, even though it's down 89%, because I think it will come back eventually. And if I'm up 4,208% on the other nine, I think I can afford to have one that is down. Okay. Next slide. Oh, wait. Go to the bottom again. Again, look what in the last month it was up 359%. And in the month prior, it was up 985%. So you get the gains and losses are uneven. 1 or 2 good months can make up for 6 or 7 months of going down. You just have to be patient and think long term. Next one. Here's another example. It's similar to the other one, but I picked some fangs and I picked some big names and I wanted to see how it would do. And you can see in 9 years, roughly, it's gone from 1 million to 10 million, up 901%. It was down 1% this month. I can live with that. And believe me, most of it, when you see them way up like that, they all have plenty of cash. So I've never had to add cash to any of these portfolios. I might borrow cash from one that's doing better, but I've never had to add outside cash to any of these portfolios. So you always can work with what you started with and not worry about adding more unless you want to. Next one. I thought I'd put one in here. One of these days, I'm going to find somebody who says, Jeff, I have $20 million I want to do AIM with. I'd say, okay, can I help you? So AIM has worked for people of all price ranges, from smaller investors to the wealthiest of investors. Look, I started this one in April of 2019. In a little over six years, it's gone from 21,465,000 to 88 million. It's up 311%. And it even has 3 of the 10 are down a little. Boeing, Advanced Micro, and Tesla. But they will come back. And see, I can afford to wait on those when the other ones are doing so well. That's why, if you can, I ideally tell you to have a 10 leap leveraged ETF portfolio, some of each, and you get the benefit of being able to afford to have a few go down at first if the others are going way up. You see on this one, it was up 31% this month to 311%. So the big ones carried it. Goldman Sachs is up 1,000%. NVIDIA is up 965%. Apple is up 775%. You can afford to have them when you do that one. Okay. Slide down. Okay. I just want to read. This is the quote I live and breathe by. And you can see I'm not the only investing analyst who has ever concluded buy low, sell high is the way to go. Look what Sir John Templeton, who founded lots of funds, writes: to buy when others are despondently selling and to sell when others are avidly buying requires the greatest fortitude and pays the greatest ultimate rewards. Amen. I say that's the creed I've lived by and swear by. Now I'd like you to, anybody has any questions, please let us know.
Okay, thanks a lot, Jeff. I'm back too here. And that was great. So one thing I just has struck me over the years working with you is you not only know AIM a lot, but you're great at picking the stocks or investments for a portfolio, because you happened to pick Apple, 20 years ago, and you picked Nvidia there back in, when
Well,
was
I
it?
look for the trends that are going on today. The trend today is high tech. That's the future. AI is the future. Space travel's the future. You know, so I like people who get into that. I'm sure when Musk does another IPO, initial purchasing offer, that I will be recommending that stock. I don't know if it'll be SpaceX or some other company, but I like people who think outside the box, who are the future, and I stick with them. And so that's why I still would stick with Tesla right now.
Yeah. But it does also prove the point that you need diversification because you never
Yeah,
know
you
which
need
ones are going.
diversification. So in my weekly and monthly leaps and ETF lists, I try and mix it up and not have only tech stocks, for example. I look for other ones. Like right now, Home Depot is a very good buy. HD is the symbol for that because a lot of people are stuck in their homes. They can't afford to sell them, so they're fixing them. They're doing home improvement projects themselves to save money, and that's going to help HD, and HD is cheap right now. So
Yep.
the beauty of my list, the master list, is within an hour you can scan it and find literally 100% of the leaps that I like, and you can find the ones that are currently a good buy, and they'll be in all sectors, both tech, non-tech, healthcare, uh, pharmaceuticals, you name it. And if you know anything about an industry, maybe you should concentrate on that industry for some of your leaps.
Yeah, I
But
believe also
again,
in your online course, I think we have a module about tech specific or sector, how to find
yeah,
sectors.
I think I give you a lot of information in it. And again, you have nothing to risk by buying my course because I know you'll treat me fairly if you feel you got your money's worth on that. And plus, I will give, we will give a free, if you subscribe to my 95 a month, and again, you can cancel any time on that too, you will find I will give you a free subscription to our newsletter
Yeah. And
as
I'll
long as you
repeat,
subscribe to the Leaps list, and that's $150 value.
and for everyone here on the webinar, whether you're here with us live or watching the recording, you will get this email you just saw here for September. We will send that to you. So you'll get
Right. So
this.
you get it by the week, probably late in the weekend. Brett's a good worker. He'll put it out there for you and send it right to your mailbox, and then you can watch it again or for the first time whenever it's convenient for you.
Yeah. Okay. Oh, let's
Oh,
see.
here. Oh, Denny asks, can I provide a link to the course? If he just
Sure.
goes to jjjinvesting.com, go look under products and you will find the course.
For you, Denny, and anyone else, the course, we picked a very nice platform for the course, so it's very user friendly. And what you have to do first is create a login and password on the site, and you do that before you have to pay for the course. You don't have to pay first, but when you do create an account there, then it gives you access to the first 2 or 3 modules for free. So you can take a test drive. You can actually you can learn things about AIM first without having to pay anything. So yeah, I recommend you do that. And then the nice thing about having a separate login and password for that course website is um, after you do pay for the course, you'll have lifetime access for it. You can go back and as long as you want. You can listen as much as you want. You can download the files that are part of the course. So it's a nice standalone platform there.
And again, anybody who has a question while they're watching the course is welcome to call me. My phone number is 210-478-0655, and I'll be glad to help you.
All right. Well, If we don't have any more questions, I think we can wrap it up soon. Anything else,
Right, and
Jeff? You wanna say?
I thank you very much for coming to taking time out of your busy schedule to listen to me. I hope I gave you some very useful information. Realize the economic future is going to be rough, and it isn't just the tariffs and other things. Life in general has gotten harder. I'm old, so I can remember the 1950s very well, and life was completely different. You younger people can't understand that anymore. Back then, everybody basically started off at the loading dock and retired as a vice president. Now you're lucky to go 2 or 3 years before maybe AI replaces your job because your boss wants somebody who doesn't want sick leave and vacation time. He wants somebody who works 24 hours a day and doesn't take meal or bathroom breaks. So you got to realize that everybody needs a side hustle. Even if you have a job you like, you need a side hustle because the only people making enough money to survive and have a good retirement are pro athletes, just about. You know, if Brock Purdy at 25 can sign a $265 million deal with the San Francisco 49ers, but you and I can't. So I'm trying to give you an easy way to invest. And the beauty of AIM is it doesn't take much time to do. And again, I'd love to have a few more clients. I charge very reasonable rates to set. I will guide you and help you pick out your initial investments and explain why. I will set up your spreadsheets. I will email them to you. I will be checking them once a week, which is all you need to do. Lucillo only checked them once a month. He's the guy who invented AIM. And then you will get the lists. And if you ever see something you like on my leaps list or master list, give me a call and we can look at it. I'll show you how you can even look up an individual strike price on Yahoo Finance and see exactly how, say, the strike 200 Apple 2027 Leap has done for the past year. And I can show you why I like it. And so this is a lifetime opportunity. And the beauty of having the course is not only will it benefit you, you can offer it to your friends and family, have them come over to your house and watch it, teach your kids or grandkids how to do it, because their life will be even harder than your life will be in the future. And, you got to look out for yourself because, everybody's talking now. Social Security might have a 30% drop in 7 years. Because as you can tell, politicians don't spend more time yelling at each other than solving our fundamental problems like climate change, deficits, and other things. So if you don't look out for yourself, you might find yourself to be a Walmart greeter when you retire. And I don't recommend that as a lifestyle.
Okay, thanks, Jeff. All right, great. Well, yeah, it's AIM definitely works. I've seen it work for myself, my portfolio, and for hundreds of other people that have learned from you. So, all right, thanks a lot, Jeff. I think we'll wrap up now.
Thank you, everyone, for coming. And I will try and hold another one in a month or so.